Welcome everybody to the live Facebook at Martin TF Wong, and tonight we have another talk targeting for small account user. Now if you have 5,000 ringgit or 1,000 US dollar, which we will look at two parts. Okay, two parts of this exchange. One is definitely using our KLSE, and the other one will be the US market, which some of you already been familiar. The tools that we're using will be on top of you, which is SMARTRobie. So this is really suitable for those of you who are first time investor or new millennium started off, or maybe like what I intend to do is to get your children or some of your younger siblings to start with a portfolio on investing with 5,000 ringgit. Of course, many of you would say 5,000 ringgit is so small, but at least this is a good start to engage. If you, what do I say this makes sense, just type it in there. Just type 2 with what I say this really makes sense. All right, so let's go on to a little bit of us and those of you who are first time. Now if you are first time user or first time listener, do type 3 in there so I know you're first time listener, so that's good to know. Now do join our Telegram chat room for all the free stock information in here, and that's the QR code, and do share that in for all the venue that we have. We will definitely share that with you. All right, and not to forget, also subscribe to our YouTube channel at youtube.com/TradeVSA for all our video archive, including the one tonight. All right, so you make sure you know it. And don't forget, those of you who are first time in here, do subscribe to our SMARTRobie, our favorite mobile apps for investing for all the KLSE trading and trade idea. That's the one we'll be talking tonight also too. And also we are doing currently a campaign here to submit your best stock trade idea from SMARTRobie for a real trade. All right, for a real trade, and you stand a chance to win an iPad. That's right, an iPad for our May in here. So, and also get a 50 ringgit Grab voucher, for food voucher from us for any of your trade submission. That's right. Okay, and also this coming Saturday evening at 9 p.m. a very special talk, very special evening. We have the Zoom link on our comment tab, so make sure you join us for our perspective from a Wyckoff, and also conjunction with launching of the US S&P 500 for SMARTRobie. So we invited Dr. Gary Dayton, another veteran from the Wyckoff area, and he's going to share his experience from the association that we have, all the Sifu and the guru from US. So don't miss it. It will be on Zoom in here at 9 p.m. here, a special Wyckoff expert. That's right. All right. So for tonight, definitely we will want to look at the KLCI, and where do we want to put our money for 5,000 ringgit. Now, first thing we need to know is this current situation that we have in the KLSE, and right now, I think this is the KLCI top 10 weighted company. So you can see from the left-hand side here, let me switch on to a laser pointer. So here you can see the banks are the big dominants. Okay, the banks are the big dominants in there. Healthcare come in second, F&B, telco, and also utility. But to take note of the special interest is that many of the big banks, okay, are currently well supported. I mean, say that. But today we do see the rubber glove, and I think Hatta Lega and Top Glove continue to sell off, and it's almost 18 days, almost been selling off for 1.5 months. My God, I also don't know what's going on the rubber glove. Continue to sell off to what I felt it's oversold, as if it's pure liquidation by some institutional money in there that they cannot hold on, and that's what they have to sell. Usually that's the case, so continue to go lower until you reach a stage where we have climatic volume, then the market will pick up. But having said that, the reason why I want to show you this is that if you look from the top 10 weighted average, you have Public Bank, Maybank, and some of these will constitute as part of the stock dividend for tonight. All right, and definitely the sector that we are talking about, the continued sell-off that we see in the KLCI, is due to the healthcare. And do take note, let me go back to the periods there. Healthcare is representing 13.9%. Right, so 13.9%, and if you look at this chart here, healthcare and plantation are the two worst performing. Of course, the best performing one is logistic and telemedia. So if you go back to the previous chart, telco is only 11%, and the finance, which is 32%, they are finance. Where is finance? Finance is still over this side here on the positive area, and then you have the telco, the logistic. If you look back, there isn't much on the logistic side in here. So even with the hot sector that you see on top here, logistic is nowhere there. So what it simply says that the market should able to hold the 1560 level in here, despite what we see on the chart, which I'm going to go up next. This is just a little bit of update, those of you who want to have that update. Right. So again, this is one of our plugin on our Trade VSA. Definitely you won't see it otherwise. Those of you who are subscriber to our system were able to see this. And of course, if you look from the KLCI top weighted company in here, Public Bank, Maybank, and this will form the candidates for our stock dividend portfolio, which is we are targeting 5,000 ringgit. I'm going to show you how we're going to pick that and how many stocks that we'll be buying tonight, as well as the commission too. So if you look from here, it constitutes about 60% in here. We will be looking at some of these stocks. Definitely from here onwards, if you look at the foreign fund flows, right, we have seen heavy leaving from the KLCI, and you can see usually average about 150 million. This line here, the red line are the outflow, the green line is the inflow. So we can see that the huge leaving spiking almost 350 million of net leaving, and that's what caused this market continue to flow outwards and flowing down. But having said that, two things. One is the finance are able to support it. Second is also we have the other sectors. One of the other sectors which is holding up is the construction is holding up in there. Not too bad because we have a couple of projects coming in here. And healthcare is the one that is causing the KLCI continue to leave over them inside in here. So that is my basis why the 1560 should be able to hold, and which we come to this chart here. So you look from here, the KLCI today dropped another 9 points. We are at the support level of 1560 in here. At about 5 billion in here. So if this level support, I don't think it will do based on what I've just talked about in here. The sector which is actually undergoing selling is the rubber glove. All right. So the market is supported at 1560 and to test the 1560 support level, that we will come tomorrow. All right. So tomorrow will be Thursday. We're going to test it, and the market should able to hold at this level. Having said the reason that I given out. All right, and I'll turn our attention now to Dow Jones, okay? And the Dow Jones market is open right now in here. We did have the red pentagon, which appeared on the 9th of May. The market rounded up, making a double top. So Trade VSA and Pentagon Guider was correct not to pick any green pentagon in here. As such, the market started to turn back down. And right now, it did test the 33,300. And there was a two bar reversal in here, and the market pops back up. So tonight it's yet to be seen whether this market is going to go up. But I think usually the case is this market will pick back down here, holding up its level. But no doubt the Nasdaq has started to turn up. Now the US FOMC chairperson Jerome Powell did talk about the inflation, and they are very accommodating to it, likely to raise interest rate within 2023 rather than 2024, and we just need to adjust along. So right now I do think this is a window of opportunity to buy on the corrections. Now, right now, because the market is actually going up because of market recovery. It's not the hyperinflation that we've seen. And also, interestingly, on point number 3 is the interest 10-year treasury yield continue to fall. And that's why we see the Nasdaq and a lot of the US stocks, you can check it out on SMARTRobie too. Many of the tech sectors started to move up, and that seems to be one of the main theme why US market is going to go up rather than going down. Right now, everybody is negative about the US market. Having said that, but you have a 2-bar reversal in here. Likely this market will tend to congest to 1 point or convergent to the 1 point, and then we'll take it from where we left off of today. All right, so we haven't seen the green pentagon, and tonight the topic is going to be how to start the dividend portfolio with 5,000 ringgit and or a USD. So we'll cover two sides of the exchange in here, both looking at the US market and the KLSE. So you can see from the earlier updates that will give you some sort of a basis going forward. But having said that, with the stock portfolio, our approach on this stock portfolio for 5,000 ringgit, it's really much of a passive way. It's a passive income. Now, if you have $5,000 and you don't know what to do with it, right, definitely this is something that you can put it into this portfolio that I suggest, and you can go away, right, for the next 4 to 5 years. That's right. Now, despite what the market is, these are some of the reasons I will share with you tonight, and the portfolio that we have, it's all been pretty much having a track record. So definitely is why dividend stocks, okay? Why dividend stocks and not other growth stocks? So generally, person who are very suitable for this, I would say, is the first timer who tend to very inexperienced and very GT about it, and you want to have something in the market that you're able to follow and engage you on the more frequent level in here. No doubt you may eventually want to trade some other types of growth stock, of momentum stock, or penny stock, but I would think the dividend stock is a good place to start with. At least it has some sort of stability, able to produce the return in a longer run. And of course, those of you who are on the senior level, if you have 5,000 ringgit, all you gotta do, you can make it to 50,000 or 100,000 in here. Just add a few more stocks as you go, just like a recipe. You can add a few more in here, but we are targeting for those real-time beginner for a 5,000 ringgit in here, and that is the purpose what we are trying to do tonight. All right, now let's look at the pros and cons. Definitely from a pro standpoint, is because of a passive income. Basically, you can do this while you are sleeping. All right, you can really pretty much buy and hold, and we are relying a lot on compounding returns, which means we buy it in year one, it will compound. And of course, Albert Einstein did say that one of the power of 8 wonders of the world is compounding returns, and with compounding returns, that's where you see your returns accelerate in the longer run in here. We will provide also some evidence. Now also, this is a hedge against inflation. And we all know inflation is the talk of the town, and inflation tend to eat up or erode the power of money. So by investing in a passive income, this way we stand a chance to protect it and have a little bit of upside. Of course, on the cons, disadvantage is mostly large cap stocks. We want to focus on large cap stocks because it has a history of very strong earnings, very strong dividend payment, and you will know the next 4 or 5 years it's going to be there. I'll give you an example. Public Bank. I don't think Public Bank will go bankrupt in the next 5 years. It's still going to be there, and that's what we are targeting some of these stocks. However, because of the stock portfolio and the lower risk that you are taking, coupled with the dividend, because you get dividend every year, definitely you have some dividend in here. And in Malaysia, dividend you only pay, you don't need to pay any capital gain tax on dividend. It already been offset in your income tax. Having said that, the dividend is not always guaranteed. Just take note of it. Dividend is not always guaranteed. So this is one of the big dangers. Now we do know that in 2020, when the COVID-19 came, Genting did not pay dividend. So as such, they decided not to pay dividend, or even AirAsia decided not to pay dividend because they need those dividend to pay for salary, pay for all the non-operating activity, and also rentals and lease, and that somehow has caused the stocks to fall off. So the pro and cons, be aware of this. It's important to that. All right. Then let's look at the dividend criteria component. Okay. First of all, dividend criteria component. One of the things we always must look at the dividend yield. All right. Dividend yield is how much it pays up. Second is a track record. We must have at least 5 years of track record that they continue to pay dividend. We can't just choose any company and say that we can pay for dividend. So we need that. All right. Now, of course, some of you may have certain questions you want to look at. Just pencil in there. I'll be happy to answer them. And the third one is the payout ratio. Okay. The payout ratio in terms of net income. We're going to go to each and one detail. Must be above 25%. All right. So take a snapshot of this one, which is very important to ensure that you have the right dividend in here. Okay. Next, first one, let's look at the dividend yield. Dividend yield is the formula is dividend paid divided by stock price. Okay, so this is amount that you usually get in your bank account. They actually deposit into, some actually goes in your bank account, but generally most of them goes into your trading account, on your online account. You can see there is also the securities firm usually send you a letter saying that how much goes in, but usually the amount is going to be a certain percentage. And right now, due to the low inflation rate that the low interest rate that we get from the banks, okay, the low interest rate that we get from the banks, which is generally about 1.75, I think many of the dividend yield that we have definitely is better than what you're getting from the banks. Okay. Also, number 2 is the track record. So we need to have at least more than 5 years of track record, consistently year in year out paying dividend, and also increasing dividend. All right, so which means the dividend continue to go up, not 1 year pay, 1 year don't pay, must every year pay. So the only way a company can do that year in year out and to pay increasing dividend, because inflation it is there every year, right? So we want to make sure it's consistently paying. So the company must be pretty much confidence and very, very strong in their management, able to pay this thing out. Okay. Okay, for our mail tonight, we won't be talking about CanSlim or Sumo. Okay, it's all on stocks dividend. All right, tonight we're talking about dividend. And the third one is the payout ratio must be greater than 25%. 25% in here. So the formula is dividend paid divided by net income. So I'm going to show you all the case study, but we just want to go through and all this so-called formula. And the payout ratio shouldn't be too high. Having said that, and not too low too. Of course, 25% is the basis. The higher is better. All right. All right. Now this is the basis for our KLCI, where we look at all the first criteria. We already said when we want to buy this, it usually have to be large cap. So when it's large cap, the business is strong enough to have the earnings to pay dividend. Now there is also another saying, companies sometimes are not strong enough, but they pay dividend, right? So, but they need to use those dividend to grow, all right? So that is why we call it the growth company, because whatever earnings that you have, they plow back to the company, they use it to grow. But in this company, they tend to do very well. Growth is stable. They are not super growing, having said that, and that is the stages of the market. And many of this, if you see here, top number 1 to number 30, they are pretty matured, okay, pretty matured in terms of their earnings, and they're able to pay a steady dividend and increasing dividend in here. So from the like of it, you can see there are multiple industry here, from Axiata, anyway, Axiata and DG are merging. They're also paying dividend. DG, so you can actually go to, let me just bring up SMARTRobie here, and you can text in all the relevant dividends. So you can just click it here. So let's look at PBB. Okay, PBB, and hit that one. And we're going to be using the tab menu fundamentals. Okay, fundamentals PBB. So you can see PBB pays, it's a rating of 1, and it has a 2.5% return. Okay, 2.5%, which is still better than the banks in here. You can notice the sector average is 2.1, is paying slightly higher dividend at 2.5%. Of course, we can also look at Tenaga. Tenaga is also another big pay. Tenaga, another big dividend payment. Paymaster in here. So you can hit Tenaga, and we go down to stock fundamentals. So you can see that pays 7.9%. Okay, 7.9% in here, with the ROE of 7. All right, so these are really big dividend payment out there in here. Okay, so do take note of this one in here. So I have selected 5 stocks, okay, that fits into this criteria, and we will go on and talk about it as a case study. Is that okay? If that's okay, just type it in there. All right, that's right. Okay, let's move on to the next one here. So one of the criteria is definitely have to be a large cap. Okay, I think Mr. Yan talked about Uchitech and Julian. They are true, but they're not the large cap that we in here, and we need to have a very, very steady in it. But if it does fit into that criteria, you can definitely put it in there too. All right. Okay, now the list of the suggested stocks that we have in here, that's right, we top in here. You can take a picture of this in here for the stock dividend portfolio for 2021. Is definitely number one will be Public Bank. It has a rating of 1 out of 8. Okay, then RC Capital 7 out of 8, one of the better ones. Nestle 5 out of 8, Allianz 4 out of 8. PBB 1 out of 8. Okay, now despite some of them having higher ratings like RC Capital and Public Bank have a rating of 1, not all of them need to fit into the criteria. The criteria that we talk about is that it had to have a decent dividend payment, not too high, not too low, payout of 25%, and a history of increasing dividend, which is very important, part of this stock dividend portfolio. All right, so take note of this. So we will go through these lists in here. Okay, definitely for our first one is Public Bank. Okay, so if we take out, we bring in Public Bank here. So I'm going to bring in SMARTRobie. Okay, and we'll look at here. So for SMARTRobie, we'll switch on to Public Bank. So you can see from this list here, okay, let me just pull it down a bit here. You can see this is Public Bank. I'm just going to go down to fundamentals. Okay, and we have the correct dividend on top of you. So it's a payout dividend of 3%, which is very good. All right, considering the market it is compared to the fixed deposit rate in here, it is a good stocks. Okay, and let's go on to our next things we're going to talk about here after the dividend, which is the increasing dividend. So the track record is important. So you look back to FY 2011 all the way to 2019. The one just on top of me here, 13 cents. It's a 13 cents amount to be paying. So it's started to pay in 2020 in here. But you notice, I do think that the 2020 may be short of it because of the year 2020, they did not perform so well in here. All right, there's a question here with dividend stock. When is a good time to buy the price? Yeah, we're going to get down to that. Okay, so if you look from here, all the stocks that we have, it is increasing and it has a track record, so it's continuing to go up. So that's satisfied that criteria too. Okay, next thing is that we want to look at the dividend payout. So we want to see here is the balance sheet. Now this, you can get it from TradingView, and those of you who have TradingView, I just want to show you how to do that. Okay, you go on to Public Bank. Now if you don't have TradingView, ensure you get a copy of TradingView from the website here. So this TradingView, and when you go on here, you see the market close, this one here, and you see the 3 dots. Click on that one and you go down to finance. That's it. All right, so this is the page where you get it. You got cash flows, overview, income statement, balance sheet, and statistic, and it's absolutely free. So of course, some of our Trade VSA plugin, we already start using it, incorporating with the market timing, like the question with Mr. Bastri is asking, together all this. Okay, so this is where we combine the fundamentals and the technicals together. So this is where we are quite unique from many of our provider, which does give you the suggested entry and the suggested exit in here. All right, so this is just to give you a note where you can get all this information from. So from a TradingView in here, net income, and right now we can see 1.55 billion is the amount paid. So you can see here, here's the amount, 1.55 billion. Okay, now do note that in 2020 there was a negative cash outflow, 30%, but almost every year, 2019 was a good year. You have positive cash flow. This was a reduction, 6 billion, 5 billion, 6 billion, 4 billion. But it is still free cash flow, all right? But it's just less because 2020 was a good year, okay? So out from the 4 billion, the free cash flow that it had, it pays out 1 billion, all right? But of course, the formula says that it paid from 1.55 billion over 4.87, which is the net profit. All right, so that's give you a 31%, which is good. Okay, because we need to have at least 25%. Now, so if you look at the TradingView fundamental chart, this is where we talk about it. You can see here, this was the year where the market dropped, so it didn't have there were no payment of a dividend, and that's why the stock price dropped down to $3, now recovered. But having said that, if you look at the TradingView, of the stock price versus the dividend payment, you can see dividend continue to go up all these years. All right, and the other chart is what we call the public bank seasonal monthly return. Now this is quite interesting. You can see from 2016 onwards a monthly return. So some of the questions you all asked when to time. So you notice September very bad month. So maybe after September you can buy, or you want to use, you can take a picture of this one in here, or you want to use SMARTRobie Pentagon Guider as a guide. But having said that, if you notice, 2019 was the year it has done very badly, minus 23%. That's why it went down for a low base. 2020 was a 10% return, but yearly average return is so far averaged out to be 2.44%. Okay, 2.44% in here. So I think this year 2021 should be better than 2.44%. So that's why, having said that, you will get some sort of a return. You're not going to end up with a loss depending over a long period of time. And we're going to talk about, it's not investment over 1 year or 2 years. I'm going to give you the time frame too. So the grand return over a period of 5 years is about 14.61% return, including the 23% return for public bank. Okay. So the next one is RCE Capital. Okay, RCE Capital, you can check out the website here, rce.com. I visited this company and I've done pretty well on this stock. So RCE Capital, again from SMARTRobie, it gives a 4.3% dividend. So it does satisfy the criteria and it pays better than the saving rates that we gave. All right, a PE of 9 times, ROE of 15%. So that is certainly a very, very good stocks going forward. All right, for a dividend stocks in here. You can see here with the exception of FY16, they pay a special dividend of 14 cents. Generally has been 1.5 cents, but over lately for 2021, this one is 21, this one is 20. All right, just take note of it because it got truncated. So you can see the increasing dividend or RC Capital make it so lovely. Actually, no one discovered this. I'm one of the few who discovered it, and I made about bought about 140. Now it's about 290 already. It's rated. If you go back, what is the rating? Notice up there. Okay, up there, 7 hour. It still is continues to be a good buy also. All right. Now, of course, some of these stocks may not be featured in here because sometimes people say there's no liquidity, they don't like it. And it used to be a mid-cap stocks, but it's already gone up to about, it used to be a small cap stock, but it's gone up to mid-cap stock right now, about 1.1 billion. 3-year compounder rate of return about 24.6%. It's still considered to be undervalued. Okay, target price is $3.40. Okay, PE of 110. Still a bit of upside more to go. All right, and to this evening the market actually dropped. Now, one of the things you should know when you buy stock dividends, when the market drop, you should appreciate it. Why? Because when the market drop, you buy the lower price, means your dividend yield is higher, right? And over time, if you look at the stocks, it will rise. Why? Because it's able to increase its earning year in and year out. So that is why they're able to pay that dividend. You see the relationship. They can pay dividend and increasing dividend every year because they know their business can grow. So the key here is not to chase. The key here is to ensure when the thing fall to a support level, you buy. Okay. Unlike the growth stocks, you tend to want to buy at some sort of a setup. So the strategy for stock dividend is slightly different. It's a passive. As I said before, you can pretty much buy and hold and you don't have to worry about that. All right, but you don't want to be entirely everything on stock dividend. 5,000 ringgit, it's a good start for you to get the feel of the market in the longer run, and when you're ready, you start another portfolio which target a maybe more aggressive approach. All right, so that's the message I wanted to give you to. All right, let's continue to move on. Now, going back to the trading view chart, looking at the dividend payout, again, you can see here, every year they continue to make very positive free cash flows here. You can see from 65%, 146%, and they are doing very well. We're seeing 53% in here. So dividend payout is 42 million from the net income of 124 million, that giving it a 34%. All right, I remember I've talked about RC Capital last year, continue to make good progress. Okay, now of course there are some Sharia compliance shares inside here. Some of these are not. That's right. So for the compliant, the Sharia compliant share, I may have to do another segment for you, but you can also go and look at it. All you gotta do is to ensure the dividends is increasing, so you can look at the trading view that is increasing in there. Most of the Sharia compliant one, maybe Julian, right? From the short time research that I have, I could only come out with this. Unfortunately for my Muslim friend here, perhaps on another event, I will do one for the Sharia compliance in here, okay? Okay, Top Glove, there's a question here, Top Glove. Top Glove cannot maintain the dividend growth every year. That is one of the criteria, okay? So remember, the criteria is every year dividend must increase. Dividend increase is due to the business increasing. For most of the Tauke Chinamen, is very simple. They don't have a dividend policy. Good year they pay more, not good year they pay less. But the criteria for dividend, because we're going to keep it a longer period of time, we need to allow it to pay more. Okay, keep into mind. All right, good question here. Okay, next one is then you can see here for RC Capital, we started at $1, 2015 dip back. But in 2007, you can see dividend continue to pay, and at one point, people finally realized, hey, this company is actually good. No one spotted it, and that's what the market broke out, because it is increasing the dividend, but it was still stagnant at 150 in here. And then finally, RCE is Sharia compliance. RCE is Sharia compliance. Now, the story about RC Capital was quite interesting. When I visited them last year, August, they told me they're Sharia compliance since last year, June. But it'll take a while for SC, because they're given a certificate for it. And this is from the chairman. And then by the time, what happened was, it was not credited into the Bursa yet. I'm not sure whether Bursa credit RCE Capital. Let me just take a look at RCE. Go back. There is a Sharia. Yeah, is it? No, it's not Sharia compliance yet. So as such, you can see here it's not Sharia compliant, so they have to wait for the SC to approve it. But having said that, the management told me is they are given a Sharia certification in there. So I thought that this could be maybe a tactic, before it get into the SC list. That's what the stock price move higher, right? Usually they do, buy before the news confirm. Well, it's something for you to investigate, all right? And for RC Capital. So RC Capital, you can see from here, the dividend breaks out and the market continued to move higher, all right? Now, let's take a look at the seasonal return for RC Capital. This is only Malaysia. We got US to go, okay? So in here, you can see yearly average return about 27% and a total grand return of 166% in here. So I've added one of RC Capital, which is a mid-cap stock, not totally large cap stocks, right? So that at least you have some upside from here, all right? Take note of that one. So the next one is Allianz, another large cap stocks, another insurance in here. So you can see this one is a large cap stock. Again, it's non-Sharia, again, being an insurance company in here. The PE is very low, only 4 only, but the return on equity is 12. This give it a FA rating of 5. 5 is a very, very good investing stocks, okay? Has a target price of 21 with a potential of $62. Now it's only $13 in here. Not many people discover about it. All right, firstly, we have to look at the increasing dividend. Now for the 2020 year, which is this one up here, it's still short of the 65, but it is still increasing. Not the, the increasing, but we all know year 2020 was a very challenging year. If year 2021 continue to increase its dividend, then it's back on the roadshow. But having said that, you can see over the last, from 2011, it was consistent until 2015, started to increase, and FY18, that's where they have a jump and they maintain. Because some of the large companies, once they started to pay big dividend, they want to maintain that. When they start to maintain that, institutional will normally come in and buy and hold their stocks. That's why their stocks are good. And I do think if Top Glove have a good dividend policy payment in here, I think they're able to have some sort of a base level in here. But right now, the Top Gloves are chasing growth. So it is a growth stock. It's not a dividend payment stocks. Okay, keep note about that one. Okay. So next, then we have Allianz in here. The net income is 247 million. Okay, dividend payout over 500. So it has a 47.5% payout. So that's a very, very good thing here. Again, you can see the dividend continue to go up, stock price continue to go up. So if they're able to increase their dividend, I think Allianz in the coming 3 to 5 years will be quite good. Okay, so you look from here, Allianz has a yearly return of 6% of a grand total of 36%. Right now, Allianz is down 11% from the 2020 in here, but I think for the year end, it will have a potential to even up to about 5% in here. So you're buying now at the right price. So this is again important information for you to decide. With the exception of 2020, the price was down. 2021 price was down. Okay. Then next one will be Nestle. So Nestle don't fall into this category. It is a Sharia compliance, but Nestle is $131. So if you want to buy 100 share, tak cukup. Okay, 100 share, $131, 100 share will be 13,000 because our target is only 5,000 ringgit in here. But having said that, just quickly go through it. Continue to have the strong increasing dividend. Okay, one of the criteria in here. Dividend payout is about 120%. They're paying out more because they got a lot of cash, right? And the dividend, there are a lot of cash. Bank got a lot of cash. They're doing very well, so they really reward their shareholders. So Nestle is one of those dividend stocks. Okay, now if you are Sharia compliance and you can afford it, and just go ahead and get this one in here. It did break up to from 80 to the $140, $130. It hasn't done any stock split yet. Having said that, but who knows? In the coming days, it might just do one. All right. If you look from the yearly average return, it's about 10%. Hasn't been performing well for year 2020 and 21. Right on the top there, but he has a grand total return in the last 5 years of 61% return. Okay, something for you to think about in here. But I don't think Nestle will end up with the 3% return for this year. It should move back up eventually. Okay, so let's look at the 5,000 ringgit so far and dividend over 2 to 3 shares. So we only target 2 to 3 shares. So using the Excel, right? So we have 5,000 ringgit. We divided by three stocks. Okay. Of course, if you have 50,000, you can do maybe 4 stocks, all right? But minimum is 3 stocks, maximum is maybe 5 stocks for 50,000. But for $5,000, you want to keep the 3,000. So you will just spend 1,333 ringgit per share, minimum of 1 lot 100 shares. So the time frame, because it is passive, it's minimum work. So you just buy and kind of hold from here onwards. Longer term will be 3 years or longer. So you want to hold it for 3 years or longer. So the expected return here will be 6 to 8%, beating inflation. That's what we say before. The returns will be kept because a lot of the returns are coming in terms of dividend. It's not one of those like Sumo. Okay, that's right. It's not like Sumo that will grow up with the additional RC capital. That's the one that have done pretty well in here. So you look from this stock portfolio for under $5,000. So I'll bring up the Excel. Right, I'm gonna share with you how we do that. So you can take a picture of this one here. All right, but I'm going to show it here. So this is actual spreadsheet here. So let me just take this one out of the way. So you have 5,000 ringgit, 5,000 ringgit. So you divide by 3, so it's 1,333 here. Okay, which you give that to. Okay, so you just sum this up. Oh, sorry, that's $4,000. So we put in another 633. Okay, 6333. That's why we do the Excel. So you can see I can do this Excel here. Okay, it's going to be 67. 66. That's easier. 666. So that will give you 5,000 ringgit. All right. So from here onwards, currently the price is 4 ringgit 20 cent for public bank. RC capital is 285. Allianz is 13 ringgit and 1 cent. Now, depending how conscious you are, if you really want to buy using the Pentagon to optimize and get a little bit more return, then you can use the so-called the Pentagon guided. You can buy when it is. I think I recommend that one. For those of you who have some technical support, you want to buy at the support level in here or buy at the lower price. As I said before, you can do so. Buying at the lower price. Wait until it goes down to from a stage 4 right to a support level in here and then wait for the green Pentagon. Then you can buy that too. So from here onwards, that will give you the number of units 396, 584 and 127. So here we just round it up to 400 units, okay, and 584 we round up to 500, and this one we round it up to 100. Okay, so from here you can see we only use 4,400 ringgit in here because we can only buy one share, one lot is 100 shares. Okay, because of 100 shares in here, right? Okay, with 6 to 8%, do we need to calculate the share price fraction? No, you don't have to for Bursa. We look at your portfolio. So what we are saying in here, you have $5,000. Next year, look at 8% return. 8% out of 5,000, so it is only 400 ringgit. So this is something you sleep. It's not something you get excited with. All right, it's only looking at the expected return as I talk about. It's only 6 to 8% return. It's designed to beat the inflation. It's designed to let you sleep better. All right, it's not going to make you a millionaire overnight. All right, keep in mind with that one. The share fluctuation, no problem. Just let it fluctuate. They will continue to do good business because they have a track record looking at the past history more than 5 years. Okay, so from here you get 4,400. So you look from the percentage, 33%, 28%. Of course, this one maybe we switch it to 600 shares. Okay, that's 34, and this one will be 26% in here. The dividend is about, I just sort of round it up to 3% in here. And the status, if you, okay, let's look at when to buy, okay? So we turn on to our Pentagon Guider here. Okay, let's look at public bank and, we will look at the stock comment and looking at the chart. Okay, right now it's green Pentagon. It's okay to buy public bank. So public bank is, status is now, okay, can buy now. Okay, RC Capital just had a red Pentagon, so we wait for it to drop first, okay? So RCE Cap. So RC Cap here is, there you go. Right, the market is here. It's gone up a lot. So on the trading view, today our update has a red Pentagon. So we wait for the green Pentagon again, okay? No hurries. So this one we wait for green Pentagon, okay? So I'll just shift this in here. Allianz. So you can use other stocks if you have found it, okay? So this is the framework. I'm just showing you how I do it. And at least you can use this as part of the way to start investing for your 5,000 ringgit. Okay, so in here you can see it's still moving sideways. Let's say eventually the green pattern comes out, it comes out. So this one also have to wait. So out from here you only wait, execute for public bank. Okay, so this itself will give you about 3% dividend yield in here, and the commission 16 ringgit. So you notice 16, just a minimum fee in here gives you about 48 ringgit, about 50 ringgit, and you have 1% out from 5,000 in here. So which means the 48 ringgit constitute about 1% in here. So this is the one. All right, take note of this. You can take a picture of this in here, right, to find out in here. So this is the so-called the recommended from my side for you. All right, but it's non-Sharia compliance, okay? But I will probably do one in later for all my Sharia friends in here, okay? Now there's a question here, is it better to buy when it is red Pentagon or red zone? Okay, this will be Allianz, huh? Thank you. Allianz is the same spelling too. Okay. So is it better to buy red Pentagon? Oh yeah, I think I leave the market timing to you, but more importantly is because we're going for a very long term in here. 3 to 5 years you'll be holding at least, right? So it doesn't really make so much on the market timing part. However, if you want to get a better feel, a better price, just wait for a red Pentagon, all right? Because one of the reasons why, if you go back to this, if you go to a wider time frame 3 to 5 years from now, you can see, right, this is a period for going back to 2005. This is a 6 years period. You can see because the movement of each stocks is relatively very slow. If you look from the monthly fluctuation, now you look at Nestle in here, you can see the monthly fluctuation changes 1%, 0.5%, 1%, 0.5%, right? And you go back to the other stocks, okay? Dividend stocks don't fluctuate a lot. You can see here with the month of 2020 last year or Allianz, there's a big movement. Other than that, most of them are like 2%, 1% kind of movement in there. So you're sacrificing maybe less than 2%. So if you can buy on the good support, like a spring or a test, right? And Red Pentagon hasn't come out yet. That's one of those of you who have come to the masterclass, you're really buying it as support. And I usually do that. But for our beginner, making it easier, you can stick to the Green Pentagon. So that's a little bit of flexibility for those of you who have this, want to use this strategy. Okay. It's a very simple strategy, right? Okay, so the expected return for the 5,000, which I've just shared with you here, giving it, this would be, let me just go back here. This is a typo mistake here. So it'll be 1666. Okay, so it'll be 1666 share per unit, cheaper than your iPhone, 5,000 ringgit. Minimum of 1 shares, 1 lot, and we are expecting to get 6 to 8% over a period of 3, 4 or 5 years or longer. Okay, keep in mind. Okay, so this is the okay. So let me just bring this up again and share with you. So I will just make an amendment and a correction here. So there you go. So from here, 5,000 ringgit, we have 1,666 ringgit spare here, okay? 1,666 on top here, 1,600, they'll get you about $5,000. You can buy 400 units of Public Bank, 600 units of RC Capital, 100 units of Allianz, all right? And these are very stable company, insurance, banks. They will be around for the next 4 to 5 years and continue to pay very decent dividend, 3%, rounding up to about 3% in here. And your broker fee about 48 ringgit. So those two, you can wait for it. But if you don't want to wait for it, you want to implement it, it is still fine, okay, for this one here. All right, so the next one is US market. Now we turn attention now to US market. Why dividend in US market in here? Because it's a low cost and high return investing. Because one reason why you can really buy with one unit, and there is more diversification. And remember, US has been preaching about dividend. Now you look from here, from a past performance in here coming from, let's say, back in the 1970s, from 1,000 US dollar, it can grow, okay? Compounding return, what we call compounding return, it goes up to 3.8 million over a period of 40 years, okay? So passive income dividend style is definitely has an edge, right? You will try to avoid many of the so-called daily fluctuation in here. I do think that some of your portfolio can also be put into it, especially in the US sense. It's a very low cost in here, and the evidence that's presented in here, if you just invest purely on the index with no dividend, it's only 627,000. But if you invest with dividend, compounding investment, that will hit a 3.8 million. So it's highly recommended for those who want to build your wealth. But if you're around, if you are very senior now, 65, 70, you probably just going to rely on the dividend more for your day-to-day usage. But for the younger one, that's why we want to target the young investors. The 5,000 ringgit will definitely do well for you and get you all started earlier. Shall we reinvest the dividend payout? No, another question here from Andy, the dividend payout. Usually the dividend goes back to your bank account, so you have the cash there, and yes, you reinvest back that one. You need to reinvest back that. All right, take note of that one. All right, let's move on to US. Now for the US side, the suggested US portfolio will be these household name: Coca-Cola, Apple, Johnson, Microsoft, and Visa. All right, we all know all this, right? Coca-Cola rating of 5, Apple rating of 4, Microsoft rating of 4, Johnson & Johnson with the Johnson & Johnson vaccine here, rating of 2, and also Visa rating of 2. So those of you who have the SMARTRobie, definitely you can switch on to the US market here, right? And you can click on SMARTRobie here, and here is where you put in KO. Okay, KO and stock fundamentals here. So you can see KO has a rating of 5. Again, same methodology that we use for the Malaysian stock, we just apply here. PE of 32 times, ROE of 34. This is definitely a very large cap, around 234 billion. And dividend of 3% from a US standpoint. It's a very, very good stocks inside here. Has potential to $65. Right now is doing 57 with a PE of 32 times, but we are going for 39 times. If they get re-evaluated, then we have a little bit more upside going in here. All right, so take a snapshot of this one here, and we're going to go on to each individual stock right now. So from here, for Coca-Cola, you can see a 3% dividend in here. Right, I'll go through it very quickly just to ensure that we all finish on time. I don't want to take too long of time. So you look at the KO dividend growth in here. Yearly annualized growth here for the dividend is 2.5%. It does has 59 years of consecutive dividend growth. So now you compare when to the US and to Malaysia, definitely, you know, we know Coca-Cola has been around even longer than perhaps Public Bank. You know, and also RC Capital. So in ways that I do, I would rather diversify on two sides, one being Malaysia and one being on the US. And you look from here, and from dividend.com, 20-year annualized growth is about 382%, and the numbers are very, very good, very, very healthy. So if you look from here, again, going back to TradingView, you can use all the tools that we talk about in here, absolutely free. And those of you who with the Trade VSA can definitely use this one. The dividend payout is 7%. It's 7 billion here. You can see, right? The net income here is 7 billion divided by 7.7 billion. That gives you a 91% dividend payout. Okay, a 91% dividend payout, and that's very, very good, very, very generous. Coca-Cola, and you can see Coca-Cola started from 35 in 2020. It's gone up to 57. Came back down. KO. And increasing dividend. That is the kind of chart, and the dividend payout, that's the one that we have to. Again, this is available in TradingView. All right, let's look at the individual yearly growth. Okay, so being a very stable stocks, just like what we saw for Public Bank, grand total return is only 25%. All right, yearly return of 4%. So we're talking about 4% in here for the kind of giving up with the 3%. Dividend. So just take note of that one in here. All right. For 2020, it only gives 2% return. This year up to June is 0.65% return because we have a big drop in 2021. But I do think the second half of the year it should recover and give it a very decent, maybe 4 to 5% in here for Coca-Cola here. Okay. And then Apple, one of the big juggernaut. I think you all should have Apple, and Apple give 0.62% dividend, much smaller, but you get more from the capital gain in here. So you can see from here, you have 8 year consecutive dividend growth. It doesn't have as long history as Coca-Cola here. 5-year growth of 59%, 3-year annualized growth of 31%, and 1-year annualized growth of 6%. So they continue to grow their dividend too. Dividend payout, being a technology stock, you can see here, it has net profit of 57 billion and 14 billion as a dividend being paid out, giving it a 24.5% payout. So which still satisfied closely. And you can see the dividend continue to increase and stock price continue to increase. Of course, the stock price increases more than anything. Okay. KO just lost 4 billion in market value due to Cristiano Ronaldo. I think it's good. Every time when the stocks, remember, when the stock price, when you talk about dividend investment, you want the stocks to drop. When the stocks drop, then the business won't change, okay? Because they will eventually find someone to replace Cristiano Ronaldo in here. I think this is because he moved the Coca-Cola to one side. Okay, that's the one to do there. These are Coca-Cola has been a long time in here. That's why we're saying sometimes this kind of investment may not be suitable for you if you tend to pay a lot of attention. But we go for a long overhaul here. We're talking about 3 to 5 years in here, all right? And knowing where the future is, I think Coca-Cola has a place too. It's also one of Warren Buffett's favorite stock. Now, if you look at Apple, Apple is quite different. You can see the tech stocks, yearly average return is about 32%, and the grand total return are almost 195% since 2016. That is very tremendous. This year, the return is only 2%. Okay, I do think that Apple right now is Green Pentagon. You can check it on the SMARTRobie. I think there is a potential for it to go over. So if you look from here, let me just bring up SMARTRobie just to show you where Apple is. So AAPL. And you can look from the stock comment and charts. So here you can see Green Pentagon already moving up. I'm not sure tonight where is Apple. Let's take a look at the live stock prices. Yeah, it's still up 0.2%, $134 in here. So pretty good, pretty decent. Again, the question is Sharia compliance. I do know that this is Sharia compliance from the Reuters side of it. So we are looking in ways maybe we can bring the Sharia compliance to. Again, it all depends on the demand that we have for SMARTRobie. Some of these services that we have, we need to pay for it. But if we don't get enough services for it, it's more of a chicken egg problem in here, right? It's costly to bring those data in here, but if we do have enough demand for the Sharia compliance, we will try to get those for our Muslim friends in Malaysia in here. Everything has a price to it and a cost to it. Okay, so that's the S&P 500 here. Okay, let's go on to our next stocks. So our next stock is Johnson & Johnson, have a FA rating of 2, pay a 2.4% return in here. Again, a long history like Coca-Cola, 59 years of consecutive dividend growth, very good years in here. You can see paying about 71% dividend, okay, 71% dividend payout in here with the net profit of 14.7 billion in year 2020. And paying a 10 billion in here. So very good. These guys are really growing. And they are everywhere like Johnson & Johnson. Let's put it away in pharmaceutical. And you can see the stock prices continue to go higher from 2015. And let's take a look at the monthly return. Okay, the yearly average return is about 6% over a period of 5 years or so, right? With a grand return of 36.9% in here. So it's quite different from Apple. So don't expect it to have a very big return. This year, maybe for 2021, a 10% return is possible, achievable. Right now, it's 4.2% in here. So keep that in mind. Okay, keep that in mind too, right? Now let's go in it and use the Excel, but a little bit of background here. So with the US in here, we have 1,000 US dollar. So you divide by 4 shares, so we are spending only 250 US dollar. And in US, one thing good about it is minimum of 1 share. It's passive income. Okay, I mean you can pretty much sleep, and it's for long term, 3 years or longer. And because of the lower commission, if you're using Tiger Broker, it's only $2 US, and the expected return per year for this portfolio is 8 to 10%. All right, 8 to 10% in here. Okay, and so what we're going to do is bring the Excel. So the Excel in here. So we just buy 3 stock, KO, Johnson & Johnson, and Apple. All right, and of course, when we divide this is 50. So $333 divided by 55. So that gives you 6 shares. Johnson & Johnson, 2 shares. Johnson & Johnson about $165. That's about 2 shares. Apple is about 132. Okay, I think now it's 132. Okay, that will give 2.5 shares. So if you buy this, you can buy maybe 3 shares. If you buy 3 shares, I already crossed it, so cannot. So I only can buy 2 shares. Okay, 2 shares of Apple 2 shares of Johnson & Johnson, and 6 shares of KO, Coca-Cola. All right. So that is about 33% in here. So let's take a look at the stock timing now. Okay, Apple is good to go. Okay, Apple is now. That's right, Apple is now. Let's look at KO right now. Look at the Coca-Cola right now, and we go down to the stock chart and thing. Okay, Richie Rich has a question about the 3% dividend yield. We are looking at a target of 8 to 10%. Now, it's interesting that you ask US and ringgit over a period of 3 to 5 years from now onwards. Do you think our ringgit will depreciate against US dollar? What do you think? And the broker fee, right? The broker fee is reasonable. Actually, the broker fee. So you're paying about 3% inside. To be frank with you, the 1,000 US dollar is just to get you started. Eventually, there is a charges for the broker handling fee. But if you do it with Tiger Broker, the charges are very, very minimum. You can check out about the pricing in there. Later on, I'll talk about it here. Okay. So you can see here KO. From the chart wise, now it's red pentagon, so you just wait for the red pentagon. So this one KO, you wait. Okay, so this one you wait. Johnson & Johnson. Okay, let's look at Johnson & Johnson there. So Johnson & Johnson, let's go to the stock chart. And you can see this one also, it's still coming down the downtrend. So you can wait for the green pentagon. So this one also, wait. Okay, Apple can buy now. All right. So now let's go back to the cost. If you do it with Tiger Broker, it's only going to cost you $6. All right, $6. However, if you do it with a local broker, minimum is 25 US dollar. All this is priced in US dollar. 25, 25, 25 one way. So it's already $75. So $75 is pretty pricey, right? So if you take $75 divided by 1,000 is close to about how many percent? 8%. So on the question that you have, Richie, right? If you use a local broker for 1,000 US, not economical, too expensive, because you can see the difference. $2 for the US Tiger Broker, or even if you use TD Ameritrade, it's zero brokerage, so you save another $6. But I think it's okay lah. Like $6 US is only 24 ringgit only. But the local one, 25 US dollar, you can see that's a real difference. So you can see in terms of commission, one going to cost you 8%. So if you buy the local firm, you notice you cannot cover back. But if you use a Tiger Broker, you can. All right. So that will give you a potential yield and an entry to the US market. Okay, so you start building this portfolio and you see how you go. So later on, you can add on to this. Okay, you can continue to buy every chart, because most of these stocks eventually with their continued growth and the market share, prices will generally go up. Dividend will continue to go up, right? So you expect that return continue to compound 8 to 10% in here, right? Right now, Young asks, TD Ameritrade apparently almost impossible to open an account. Some people tried last year to August, no chance you can buy. So okay, I'm going to give you information in here. This is the chart just now we talked about just now in here. I just showed you the Excel. All right, and this is the numbers that you want to call if you're not done so. All right, that's our support line for our US broker side with the options whether you want to do it locally or you want to do it through the discount broker, which we talked about just now in here. So this is the number you want to contact. So, okay, now if you want a faster way, you don't want the 6 to 8% return, then you follow the SMARTRobie trading portfolio. So far, up to June, we are up about 17%, right? For 6 months only, compared to the other one, 8% return. But this one is to follow the fixed rules. And some of these we do discuss in our workshop. So continue to follow our workshop, continue to follow our fixed rules that you can do better. Right? So we're just giving you many opinion about portfolio construction in here that you can understand better, both from Malaysian side and the US side. So again, life is all about options. In here, I would trade 70% one portfolio strategy and another stock portfolio 6 to 8%. So that way I sleep better because of different strategy. Most of people need to know one strategy. So they tend to get very, very jitty, or because they tend to want to trade in and out of it. And I find it's not may not be healthy over the long run, because you need to know your own required rate of return. As I said before, once you know your own required rate of return, then you're able to build your wealth, right, to hit that $1 million portfolio that we talk about in here. It's very important those who continue to follow me in my masterclass. It's my job for me to train you how to hit your $1 million portfolio, depending on when you start, within 7 years. All right. So this is one way we want to do that. So if you look at this, is the stock portfolio that we have on the Tiger Broker. So we continue to outperform in here. 1 month about 7% return. This is a trading portfolio. This is not a stock portfolio. If I said that, if you want to have a trading stock portfolio, you employ a different strategy, and these some of the things that we talk about in here. A lot of time people tend to self-defeat them because they try a bit of hitting a bit of right. And Chow Shop is with TD Ameritrade. They are also zero brokerage. All right. Now, very important that why we recommended I use Tiger Broker, because I want to trade the Hong Kong shares, because eventually we'll trade the Hong Kong and the SGX too. All right. Whichever fine with you, that's good. Make sure you get the kind of support. So now do remember, losing a small account can be an expensive lesson in the stock market. So don't go through the a lot of what we call self-defeating in here, not having a plan. I think I've talked about that usually in all of our workshop, and I'll continue to discuss more as part and parcel of our education program in here. Of course, success will be easier if there is a mentoring in here, and like one of our a student who joined us, he's following our Pentagon guidance system in here, and he's continued to make trades based on fixed rules. All right, I think that's very good. You can see that that's how we want to share with you a fast track mentor with our coaches in here. As you can see, so coaches, our group in here, continue to share our knowledge and our training with you. So just like tonight, you're able to build that portfolio that you wanted. Of course, this is our coaches and myself. We just completed our June intake of our masterclass in here. And you can see right now, if you hear and see and read, but there is no participation, the mentor and the coaching, that's where a lot of people left out in here. And again, going back to the train trader and train investor for Agenda 2021, our coaches and myself will be there to able to guide you, all right, in here. So again, in our screener in here, we do have all our growth screener. Again, another strategy we will explore later. Make sure you join us. But tonight we completed our stock dividend in here. But for more of you who want to go to the next level, join us in our August intake for our masterclass for the US and KLSE market. Lots of opportunity, and many people continue to say many good things about us and our courses in here. And to be efficient trader, it's important, right, to read the market and able to understand price and volume. And that's the number that we have in here. So thank you tonight. Thank you very much. If we have done a very good job tonight, do give us a feedback for our stock dividend portfolio tonight on the Google review in here, on you see on the right hand side here. Really appreciate, and we want to continue to improve our services and our thing here. So I'll take some questions. If you have any questions regarding about the US market or the Malaysian market in here, right? For the Tiger Broker dividend, no, nothing goes into the Malaysian bank account, Rosalind. Everything go to your US side. And at the end of it, it is a US account denominated in US dollar for that purpose. Right? So you have a little bit of hedge outside of Malaysia. Okay, it's important. Again, going forward, my opinion is that over long run, I do think that the US dollar is. People was talking about 3.99, isn't it, early this year, right? 3.99 ringgit to US dollar, but it's not. It's already 4.14 already, right? Any more question in here? Do appreciate if you can go over to our Google Play Store that you see in here with the QR code and give us a feedback. We appreciate it. And also that's a number in here if you want to find out more of our masterclass and paid services, and also our masterclass intake in August, where we will help our student over the next 12 to 15 months on this coaching and mentoring to the US market. But tonight, with the short of 1 hour, I've given you a stock portfolio that you can start off with 1,000 US dollar and 5,000 ringgit for the Malaysian market. All right, so that's all we have. Thank you for coming tonight. I'll see you next time.